And I had, I'd had a conversation with Charlie about oligopolies when I was looking at this whole situation about rational oligopolies and so on. And Charlie brought up a very interesting kind of case study data. He said that Buffett had studied Coke bottlers in Coke and Pepsi bottlers in virtually every geography he could around the world. And he found that in something like 95 or 97% of cases, both the bottlers made a lot of money. It was a great business for both of them. But he also found in like 3 to 5% of cases where neither of them made any money. What happened is that the Coke bottler or the Pepsi bottler in a particular geography decided that they wanted to dramatically increase market share. And so they dropped their pricing dramatically in the hopes of raising volumes. And of course, there was a reaction from the other party who also dropped their pricing. And so they got into these bidding wars where the consumer basically ended up winning and neither of them could back off. And those businesses, so he found that there were a few geographies, maybe 3% or something, where Coke bottling or Pepsi bottling was not a good business. And the rest of the places it was good. So basically, the when I met with Samsung, they were very clear that they had 50% market share. They did not want more than 50% market share. They said, quote unquote, bad things happen to us when we go over 50%. And they were actually the low cost producer when I was first making the investment. So I asked them this question. I said, look, you're the low cost producer. You can drop your prices to a point where your other two competitors will actually start bleeding and you will still be making money. And they said, we know that. And we also have this 50% rule where we don't want more than 50% market share. So we are happy to have healthy competitors and, keep it at that. And when I met with Hynix and Samsung, it was the same situation. And so basically, when you have uh, these oligopolies, it is illegal for them to sit in a room and collude on pricing, right? I mean, that would be, you're going to jail if you're doing that. But they do what the airlines do. So American Airlines will drop its price on a particular route, and 5 minutes later, United will announce that they've changed their pricing as well. But the way they communicate with each other is through the marketplace. And what I noticed when I was looking at Micron and Hynix and Samsung is that the three companies issued a lot of press releases. And I was really confused why they issued so many press releases. And then I realized they're not talking to me. They're talking to each other and they're signaling to each other. So they would always say in the press release that, we are at such and such capacity and this is our CapEx budget and this is what we're expecting to do. And then the next guy, after 2 days, will issue a very similar press release. And after 2 days, the third guy releases. So I was convinced that this was a rational oligopoly. The memory business is a very complex business. It's virtually impossible for a fourth player to enter the space. It's a really complicated technology. There's just too many patents. And, you would have to violate patents left and right. Even if you're willing to violate all the patents, the process is either complicated. So the Chinese have been trying forever, for example, and they will not have a credible memory business that can go up against these three guys. So that was the thesis. But then what happened is in late 21 and 22, Samsung got antsy and decided they wanted more market share and they wanted to increase their profits. And so they went off the reservation. They basically increased production, reduced margin, causing pain. And by then, actually, what had happened is Micron had become the low-cost producer. They had actually moved up the curve. Sanjay Mehrotra was executing really well. But once that happened, from my point of view, that shattered the thesis because you're in uncharted waters now. And you're basically violating this kind of core core fundamentals of what our whole thesis was on. And I couldn't see this thing working out in a good way. The second things that started happening, which was also unexpected, was the US-China trade wars and all these intellectual property wars. And Micron became a big casualty of that. So China banned a bunch of Micron products and different things and all of that. And that helped the other two players, but it hurt Micron. So when I saw that the US-China situation, which is hard to forecast and predict, and I saw that these people have gone off the reservation, we had, maybe 60, 70% gain on the stock over the years. I thought we would get a lot more. So I said, okay, we take our chips off the table. The investment didn't work as well as we thought, and the thesis didn't work. We'll take